Hello, welcome back to the Passports, Profits, and Pixie Dust podcast. I'm Lindsay Dollinger, and we have a special guest on the show today who I am so excited for you to meet, Andrew Roed. So, Andrew, welcome to the show.
Thank you for having me. I appreciate it.
Yeah, I'm so excited. Okay, so Andrew, tell us a little bit about what you do because I didn't want to spoil it by saying, but I know it's probably either something that people really love or people really get anxious about talking about. So, what do you
Yeah.
do, and kind of how did you get started doing it?
Yeah, good question. So I own a company called Taxes for Travel Agents, and basically I just focus on the tax preparation, tax planning, and then the financial education for travel advisors. And I've always had like a passion for this type of thing, for taxes, for finance, all of those kind of things. But I got into the specific like travel agent realm because my wife is a travel advisor. And just like a lot of travel advisors out there, she got into the business because she loves travel, she loves booking travel, she loves talking about travel. But when you become a travel advisor, you also become a business owner. And with that comes all the tax and the finance side of things. So I found myself helping her out, then helping friends of hers and friends of friends of friends. And now it's grown into this huge, Facebook group and huge, it's my full-time job now. So, and it's something I really, really enjoy doing. I love the financial education aspect of it because unfortunately it's something that we're not taught in schools
Right.
and it's unfortunate.
Yeah, and I think it's a side of it. I know myself as a travel agent as well is, and I'm in a lot of the groups and things, and you wouldn't believe the people who I feel like didn't realize that they had to pay taxes. Or
Yeah.
yeah, and I'm like, yes, this is a business. This is a legitimate thing that we have to do. And I also love how your story and how you ended up kind of niching down in that area as well, because that's also how I ended up niching down is I've been a coach for women entrepreneurs for a really long time and always kind of just felt a little bit scattered, like talking to every single person. And I'm like, why am I not talking to travel agents, talking to travel agents
Yeah.
or travelpreneur, people who have some sort of travel in their business, because it just makes sense. So I love how your journey is very parallel to mine as well, in that aspect. So let's get started just diving right in. Maybe someone who is a new advisor, what are some things that, gosh, they just need to be aware of in preparation for their first year of business and their first year of doing taxes at the end of it?
Yeah. When we get to the end of the year and it comes to be tax season, one of the things that I hate more than anything is having to come and tell somebody that they owe a bunch of money in taxes and
Yeah.
they weren't expecting it. And
Yeah.
so we never want that to be a surprise to us. And unfortunately, a lot of people, when they get started becoming travel advisors, that very first year, it can be a surprise at the end of the year, but it should not be. Couple of mistakes that I see new travel advisors making that I think there's simple fixes to. One is not separating your personal and your business finances from day one, right? You can take money from your personal account and put it into a business account or even just a separate account, but make sure you're keeping those two things separate and it'll make your record keeping side of things much, much easier. So that's the very first thing. Separate what your personal stuff and separate your business finances from each other.
Yeah, and it's never too
This
late to do that, right? So like if someone's listening to this and they're like, "Oh crap, I don't do that." Like they can get started today and start doing that.
Yeah, yeah. And there's lots of different, if you're already banking with somebody, it's very likely that they'll set you up a business bank account. Maybe you need to get like an employer identification number or something to set up a business account, but that's free to do. Otherwise, just set up a separate banking account, checking account with a debit card, those kind of things, so that all of your transactions that related to your business are going through your business. So that's step one. If you can do that from the beginning, you're in a much better place.
Yeah.
And then I would say step two is putting a system in place to track your income and expenses throughout the year. I end up working with a lot of travel advisors that come December at the end of the year, they're trying to figure out what they spent money on throughout the entire year, what their income looked like, all of those type of things. So making sure that you have a system in place. It can be as simple as a spreadsheet that you utilize, or it can be something as complex as using like QuickBooks or some system that you pay with. But whatever you do, pick a system that you can utilize and work and use it to start out. So those are the very first two things that you need to be doing as a new travel advisor.
Yeah. Let's talk really quickly about QuickBooks, if you don't mind. I don't know how much you use it with other people. Is there a point in your business, like okay, you're either making this much money or you have this much expenses or something like that, where you're like, okay, it's probably time to start looking at software like this? Or can the good old fashioned Google spreadsheet do the trick as long as you're keeping track of the right things?
I mean, the Google spreadsheet can work perfectly fine. I personally use a program called Wave, and it's very user friendly, and I've been utilizing that. And they have paid and free versions. I think it comes down to when your business grows to the point where it's taking up too much of your time to input all of these transactions and you're looking for more automation, that's maybe when you start looking at, okay, Wave, they have an automated system. QuickBooks is extremely powerful and probably one of the best systems out there. However, do you as a new travel advisor or a small independent travel agent need something like that? Do you need this huge, powerful system, or can you get away saving money on something like that and just doing it with a less powerful system? And I also think that entering in your information manually for your first year when you don't have a lot of transactions is really good, because it lets you understand like what's happening in the background, instead of letting the computer and automation take over.
Yeah, I do. I really agree with that, because I mean, even not as a business owner, even just like my personal life, it's so easy like to use your credit card for things, right? And yeah, I pay it off every month, but it adds up and it's so much more powerful. You know how they say like to use cash for things instead of like, it hurts a little more when you have to pull out your cash versus a card. So like that kind of thing, like it hurts a little more when I'm like typing it into my expense sheet, like, ooh, do I really need to be doing that? Maybe not, right? Yeah,
Yeah.
it is a good like aha moment when I have to input it all myself, for sure.
Yep. And if you're using a bookkeeping software, you're looking at yourself on like a month to month basis to say, oh, I made $5,000 this year, but I spent $6,000 or, this month. And so you're kind of start to keeping track of those type of things. So that's important.
Yeah, I love that. And I love keeping track of it, if not weekly, then monthly. So like you said, you're not getting to the end of the year like, the dreaded 2 days where you have to go through all your receipts and try to remember all those things. Like,
Yeah. For all of my clients and for even people that I just talked to, I always recommend that you set aside a time each and every week to do your bookkeeping. Just like you would schedule anything else, just schedule 30 minutes, and you probably don't even need that much time as a new travel advisor, but schedule some time to make sure you're keeping track of those things so you don't get to the end of the year and find yourself in a big mess.
Right. Yeah, I like to call it Finance Friday. That's what I do.
No, that's
Yep.
that's a great thing to call it.
Okay, so now let's talking about you're talking about getting to the end of the year and getting in a kind of a mess, and that could be in regards to not knowing where expenses are and things like that. But it could also be in regards to missing your quarterly taxes. Can you explain that a little bit? Because that's another thing I've heard from a lot of people. Like I had no idea even what those were, or that I even needed to pay them, because I thought all taxes were due April 15th.
Yeah, so the way I always describe it is, imagine you're a travel advisor and you're working throughout the year and you're making money and the suppliers have all of your money, but they say, you know what, I'm going to hold on to all of your commission checks and I'm going to pay you next April on the 15th of April and give you all of your money at one specific time. You wouldn't want that, right? You want to be paid your money as you earn the commission. The IRS is the same exact way. They want to be paid the money that's due to them throughout the year. They don't want to wait until the end of the year. So when you do your own taxes or you have somebody do taxes for you, they will typically provide you estimated tax vouchers. And those are amounts that you should pay in each and every quarter. And all it really does is it prevents you from having any taxes or penalties at the end of the year. It doesn't necessarily mean that you've paid enough in taxes or that you paid too much. Those estimated taxes are always based off of the prior year. So that's where that number comes from. It's based off of the prior year because the IRS doesn't know what your next year is going to be. They're just assuming that everything is going to be pretty close to the same throughout that next year as it was the prior year.
Oh, okay. I didn't know that about prior year.
Yeah. So that's how the estimated taxes are generated. And then I always recommend that you pay in those estimated taxes that are put onto those vouchers because that's going to prevent you from owing any penalties or taxes or fees. If you wait and you get to the end of the year and you haven't paid any of your estimated taxes in, then you can still pay them on April 15th or whenever you file your taxes, but there's a possibility that there'll be additional penalties or interest on that payment. So it's just extra money that you probably didn't have to pay, right? And so I don't want to give the IRS any more money than we have to.
Right.
So
Yeah.
that's why you want to make sure that you're doing those things.
So as a first year agent, like first year tax calendar, you wouldn't need to pay estimated taxes then, since they were based on the previous year?
Not likely. Nope, you shouldn't need to pay any, unless you had some other business stuff going on, or you had under withholdings from other things like that. But as a new travel advisor, it's very unlikely that you need to pay in estimated taxes. That doesn't mean, though, that you shouldn't be setting aside money to cover your taxes at the end. And one of the things that gets missed a lot is that not only do you owe income tax as a travel advisor, but as an independent travel advisor, you're paying Social Security and Medicare tax, right? And when you work for a company like a W-2 company, they're withholding that money each and every paycheck. They're paying income taxes for you, or they're paying self-employment taxes. When you're an independent travel advisor, none of that's being withheld. So you got to make sure you account for that. And my kind of rough number estimation is set aside probably around 25 to 30% of your net income to account for taxes at the end of the year. And that should be enough to cover your self-employment taxes and your income taxes. But don't get yourself in the place where you haven't set aside any money for taxes at the end of the year.
Yep. Yeah, I've heard some horror stories about that, and I'm like, ooh, that would be very painful to get that bill.
Yeah.
Okay, so one of the other questions that I hear a lot from travel agents is, what can I write off trip-wise? Because we can say, like, every trip is a research trip, right? What sort of general advice do you have for us on what can be written off, specifically travel-related? Like, when can it be written off, that kinds of things?
Yeah, so I get these kind of questions a lot, and there's no real great answer to just give a blanket statement. I can give some resources to those type of things, and I can give you like an idea on some examples, I suppose.
Yeah, give us some examples.
Publication 463, it's an IRS publication 463, and that is kind of written in, I guess, readable terms for people, and it's completely on travel. So if you're the type of person that is willing to sit down and read and dig into stuff, then go look at publication 463 from the IRS, and that's where they get all of their information. They break everything down into travel in the US, foreign travel, and then travel by luxury liner. So they have different rules for different types of things.
Okay, cool.
So let's see, as far as travel would go, you have to first, before you go on a trip, have a business purpose for that trip. So maybe that's a conference, maybe that's, you're going to be doing site inspections, all of those type of things. You have to have a business purpose before you go on the trip. You cannot go on a trip and then decide while you're on that trip that it's going to be business related once you've gotten there. I do get a lot of people that be like, well, I got a fam rate and I'm going to go to this place and just hang out and check it out. Is this a tax deductible thing? Not likely. It's more of a personal type trip that you're taking. So the way I approach it and the way I have everyone kind of look at it is you need to understand what like a business day is. And when you go on this trip, what are your business days and what are your personal days? So in general, a business day is a day where your presence is required, no matter how much time you spent on it. So if you had to go there and you needed to sign documents, or maybe you were specifically going to do a site inspection or something like that, that's a day that you needed to be there, your presence was required. Another one is that it was your primary activity during the day. And I describe this as you spent more than 4 hours of your day on business-related things, okay? So those are things that you'd be able to say, like, these are business days. And then you're able to deduct your expenses that are associated with business days. So you go on this trip. If it's a business day, you can deduct your meals, lodging, things like that. If it's a personal day, you cannot deduct the expenses for that.
Okay.
And then as far as your transportation days go, there's lots of different rules, and that's why I suggest you look at publication 463, because it depends on how much time you were there, how much personal versus business you had, whether or not you can deduct the full cost of your transportation, or do you have to prorate those expenses. So those are things to look at.
Okay.
And if you do go to my website and you look, I have some court cases that other travel advisors have tried to deduct a whole bunch of things or whatever it might be and kind of get themselves in trouble. And so you can kind of learn from mistakes that other travel advisors have made. The main thing that I see people lose out when it comes to being able to deduct travel is they do not have the documentation to prove that it was business related. Your opinion, your description, your verbalization of what you did is not sufficient when it comes to the IRS. Okay, they want written documentation. And so my recommendation is to keep like some sort of a journal or diary or notebook when you go on these trips, documenting what you did each day that was business related. If you're going to try to say that your day was business related, make sure you're documenting that and you have that information readily available in the event that you are audited.
Okay. Now, I personally run these as well, and a lot of people listening to this run retreats, business style retreats. Specifically, I run one in Orlando. We go to Disney one day, but while we're there, we do content. We have like little, discussions, business related, and then we stay at an Airbnb. And the other days, like I'm actively teaching, and we're making content and brand photo shoots and all of this. So, just using that as an example, if I were to provide, the emails with the itinerary, the schedule that I made, the Eventbrite listing, would that be sufficient for the IRS as like proof for those sorts of things?
Yeah, exactly. So like why you were there, what you did each day, like why was your presence required and how is it going to benefit your business kind of thing? Because the IRS allows you to take business deductions, making the assumption that by allowing these deductions, you're going to be more profitable in the future. So you have to be able to prove that these deductions that you've taken are ultimately going to make you more profitable down the road.
Okay. Now, another one, I'll give you a specific question as well. AMA Waterways, I'm sure you're familiar with them. They have FAM rates. And then on the FAM rate, the majority of the trip, it's kind of like at leisure, but there is at least one day, if not two or three, where you have like an hour-long seminar. Is that something where you can only take off the portion of like that one day where it's like the hour-long seminar, or is that something that you could say, well, I'm writing postcards to my clients in the evenings, I'm shooting social media content. What's your take on that one?
Yeah, so cruises are cruise anything by water has its own specific set of rules.
Oh, okay.
And I wrote a whole blog on it because this is a question that I get all the time. But I think it was probably back in the 60s or 70s, the federal government put a law into place to help protect and grow the U.S. cruise industry. Right? So they wanted to see like U.S. cruise ships grow and for that industry to grow. So they put a law in place saying that in order for you to deduct any conferences, seminars, or similar meetings on cruise ships, that they had to be flagged in the United States. All the ports of call had to be in the United States. You had to attach to your tax return all this information on what you did on that cruise ship and all of those kind of things. They basically made it very, very difficult to deduct anything that's a conference, seminar, or similar meeting. Now, that's what the law says, and that's what's there, and that's what I tell everybody. I don't know of a specific case where somebody has come after and said, no, this cruise is denied because it was a conference, and this law says that. But that's what the books say. So if the IRS wanted to come and tell you that your cruise is not deductible because it was a conference or a seminar, then they're going to win that because the law is on their side. Now, there's a couple other options, and I cover this in the blog that I wrote, but that is transportation by luxury liner. So you can use like a cruise ship or a river cruise or whatever to transport yourself from one location to another, right? Same as you would on a airline. You have to have like a reasonably direct route, and you have to have a reason from going from point A to point B.
Right.
So that would be like if you were going to a river cruise conference in Europe and you wanted to take a repositioning cruise from Florida to Europe as your mode of transportation instead of an airplane, you legitimately could. There are some like daily limits, but they're very high. So that's one way around that option. And then the other option is looking at it just like we'd look at something on land. If it's not technically a conference, seminar, or meeting, it's looking at things on a day-by-day basis. And whether it's a business day, whether it's a personal day, and making sure you're documenting those things. And my recommendation is deduct the expenses associated with your business days. And then if it's a personal day, just enjoy it as a personal day. And just don't worry about it. Just deduct the business days and not the personal days. And then you had mentioned, writing postcards to clients or something like that. One thing that gets a little bit confusing is when you're traveling, and I've run into this with my wife, which is we'll be on a personal trip, staying at a hotel, and her clients have an emergency somewhere. And she spends half the evening and most of the night sitting in the hotel room, working, trying to deal with an emergency that our clients are having.
Yeah.
Unfortunately, that doesn't make your trip business related, right? You could have done that work from anywhere. You could have done it from your office. You just happened to be on a trip. And that is just the downside of being a business owner, right? Having to deal with those type of problems.
Yeah, that makes total sense. And I love that you're saying this too, because I hear a lot of advice that is way more on the liberal side, and I don't think really backed by truth, with like, well, if you have one lunch and you're talking business, you can write off your whole trip. And I'm always like, oh my gosh.
No, I'm very conservative, and you'll get that from like my conversations, and it's based off of IRS publications, court cases, all of those type of things. And I'm, as an enrolled agent, I have to give that legal, that legitimate advice, information.
Well, I'd rather be safe than sorry as well. Who wouldn't, right?
Oh, and there's plenty of agents out there that are pushing the extreme limits, and they'll tell you what they do, and they very well could continue on doing that for years and years and years and never get in trouble.
Right.
But they also could, and so I like to be able to sleep at night, and that's and I can by following the rules. Yeah. Exactly.
I totally agree. Okay, when you're saying if you do have a mixture of business and personal on a trip, for example, like with my retreat, we'll give an example. If I come in or I stay a day later to enjoy myself, would that mean that I need to take the total cost of the Airbnb and divide it by the number of days to figure out the amount of the Airbnb I could write off? That's what I'm assuming you mean.
Yeah, that's what I would look at it as. Yep, I would break your costs on a day-by-day basis, especially when it comes to the lodging, the meals, all of those type of things. Right. Now, the transportation costs, that's where some of the other rules come into place are you able to deduct the full cost of your transportation, or do you need to prorate it based on your personal days versus your business days? And that's a more complex topic, but essentially business days, deductible, personal days, not. And if you have a lump sum, like an Airbnb or whatever, then just break it down day by day. If you can.
Okay, I'd love to know your opinion, because I know you err on the side of caution more than some other people that I've talked to. Clothing, as a travel agent, to me, clothing is not something that is really ever needed above and beyond our normal life. But someone recently told me that they were advised that if you bought clothing specifically to speak at a conference, like say you're a speaker at a travel agent conference, or for brand photos for your travel agent business, that you could write off your clothing, your hair getting done, your makeup getting done, your nails getting done for that. I'm just curious what your advice is.
That's a hard no, and there's lots of tax court to back that up. Yeah.
Okay.
It's basically, it's inherently personal, right? It's yes, you have to have a nice dress to be the speaker. You have to have your hair done, makeup, whatever that might be. But those are inherently personal things, and there's lots of court cases out there that people have tried this process, these type of things, and not been able to deduct it.
Okay.
The only thing that clothing-wise could potentially be deductible is something that you couldn't normally wear other places. So this might be like you're going to a conference and you have a polo shirt that has your logo all over it and those kind of things. You're likely going to be able to go down and be able to deduct those expenses. But anything that is shoes, pants, shirt, that's just general wear that you could wear out into a normal dinner somewhere.
Rewear.
Yeah, you could rewear and do anything else, and it's not specific to your business. That's a hard no, and I can confidently say you won't be able to do that based on all
I
tax
about
court
fell
case.
off my chair when someone, because the backstory, I went to a conference with someone last year, and we were talking taxes, and she was like, "Oh, I wrote somehow it came up. We got blowouts for our hair, which I have never. That's the one time I've ever done it." And she was like, "Oh, well, it's a tax write-off," and I'm like, "I don't think that's a tax write-off." Like, I mean, I'm not a tax expert. Like, I like to think I know a lot of things about it, but I'm pretty sure that would be a hard flag with the IRS.
Yeah, unfortunately, in the days of like Instagram and TikTok, there's lots of people out there giving whatever advice that they want to give. And the thing is, you need to be careful when you listen to those things, because when the IRS comes to audit you and you tell them, well, I saw on a TikTok or an Instagram that I could
They're not going to
do this, they don't care. And there's no consequences for the person that gave you the terrible information. They just move on with their life. Yeah.
Yeah, exactly. Okay, let's talk a little bit about getting audited. So hopefully we don't ever have that happen. But I would like, could you walk us through that process, what that kind of looks like, and maybe make it a little less scary? Like, I think one of the comments that I had heard one time is basically people were thinking like they were going to go to jail if, they wrote off the blowout and then it ended up you weren't allowed to write off the blowout. And not that it shouldn't be a little bit scary, but can you walk us through that? Like, what does that even look like? What does that even mean really to people?
Yeah, so I like to say that just because you get audited does not mean you've done anything wrong. I've been audited for something that I didn't even do wrong. I was able to show the IRS, no, this is actually correct. And they said, oh yeah, no, never mind, we're done. So there's lots of reasons why you might get audited, right? It could be simply random. You could randomly be chosen to be audited, and they'll likely look at your tax return, and this could be happening in the background, right? Look at your tax return, and nothing here, they put it away. Or, oh, there's something a little bit questionable, we'll send a letter and ask about it. Other things that could get you audited would be like, when you report your gross income for your business, if that number is less than your 1099s that were sent to the IRS, when you receive a 1099 as an independent contractor, just remember that the IRS gets all of those as well. So if your numbers aren't really matching up, or you're reporting less income than the IRS thinks you should, that could potentially get you audited. And normally it just starts out with a letter, right? You'll receive a letter from the IRS letting you know what the issue is. Usually they're not coming in and auditing everything that you're doing. They're auditing a specific thing, right? They have a question on something. Let's just say you're a travel advisor and they come in and say, we don't think that these travel deductions are deductible. You need to provide us information on those things. And it's usually a letter. That's how the first communication will start. And you provide them the information that you need, and they will either accept it or not accept it. And then it's kind of up to you whether or not you want to keep going down this path and fighting the IRS on what you believe, if you have the documentation, all of those type of things. So usually it's letters back and forth. Then it can go to like a meeting with a specific IRS agent. So you'll go down and you'll sit down and you go over all of these things in person. And then if you still don't agree with the IRS at that point, then that's when it can go to tax court, where you are essentially saying, I don't agree with the IRS. I'm a person. I don't agree with the IRS. And a tax court will decide whether or not you're right or the IRS is right. But most of it ends at the letter portion, back and forth.
Okay, that's good to know. Well, something you just said, and I was thinking, one thing that I had heard could be a reason for like flagging that you could possibly get audited is if you're not showing profit in your business after a certain amount of time. 'em. time. 'em. 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 'em.
this takes me back to like the very beginning, and if you like, and I'll talk about the class that I put together, but one of the very first lessons that's in the class is a section called hobby versus business, and it's free for everybody to take. And the reason that it's free for everybody to take is because everything that we're talking about here, deductions, home office deduction, like all of these type of things, assumes you are a business and that you are not a hobby. A business operates to make a profit. A hobby operates for, enjoyment. And like an example that I give sometimes is like my wife loves to collect seashells and sea glass and make jewelry out of it. And sometimes she'll sell a piece of jewelry here and there, but she is not deducting her trips to go collect seashells and sea glass. She's not deducting her equipment. She's not doing anything because that's a hobby for her. She has no profit motive. And there's lots of travel advisors out there that do operate as a hobby. They just do it because they want to do it. They get some discounts, all of those type of things. Right. Then there's the business owners. You can deduct expenses as a business owner. If you have losses year after year after year, the IRS is going to question whether or not you are in business to make a profit or are you a hobby. And they may come and audit you and say, look, we don't think that you're in business to make a profit. And so we want to look at these type of things. What are you doing to make yourself profitable moving forward? And so those are things that they're going to look at too. They're going to look at whether or not you're treating your business like a business. Do you have separate books? Do you have a bookkeeping system? Are you changing unprofitable methods to be more profitable in the future? If traveling to different places and spending money on all of these things is not translating into actual sales, then they're going to question whether or not you have a profit motive. And there's definitely tax court cases out there that show businesses being reclassified as hobby, and then you have to go back and repay the money that you deducted previously, and plus interest and penalties. Yeah.
So in that case, do they just, because I mean, if you showed legitimate expenses, so say, I don't know, say you made $1,000 in your, you got paid $1,000, so that you got your 1099 for $1,000 for your travel business last year, but you went to a conference and it cost you $2,000 for the ticket, for your hotel, whatever. In that sort of scenario, if they're like, no, that's a hobby, would they just drop off your conference costs and then you owe money on this $1,000? That's what I'm trying to mind.
That's like a small scale thing. Yep.
Yeah.
That would be like at a small scale. But really in reality, what happens with a lot of people is they'll have very small amounts of income. So $1,000, $2,000, $3,000, and then they'll have lots and lots of expenses. Mm-hmm. So $5,000, $10,000, $15,000, $20,000. And that starts to raise some red flags because those losses from your business offset your income from other sources, your W-2 job, all of those type of things. And the IRS doesn't want to play games and say, oh, you're going to just take a whole bunch of losses by traveling around the world to deduct your expenses from the other side. So they're going to keep an eye on it. And it's something that, it's definitely a possibility. To be audited because of that kind of thing. But don't think to yourself, especially year one, maybe even year two, having a small loss here and there is not unheard of. And the IRS understands that brand new businesses are very likely to lose some money in the first couple years. But if it happens year after year after year, you're slowly putting more and more of a target on yourself at each year that passes by where you're having a loss.
Yeah. Okay. Thank you for explaining that. Because I mean, there are a lot of travel agents, doing this as a hobby and doing this as a side business. And I think that's a good reminder for us just, to be aware of what you're writing off and what you're bringing in versus out, for sure. Okay. Tell us more about this course, because that course and all the ways that we can work with you, because I definitely feel like this is something that a lot of people need.
Yeah, definitely. So one thing I do is the tax preparation side of things. That's for me, that's kind of like the bread and butter, or what I do during tax season, right? I prepare people's taxes one-on-one, working with people, doing their taxes. Like for this year, I'm pretty much booked and I have a fairly long wait list. So you can go to my website and you can add your name to the wait list, and I'll try to get to everybody, but it won't be this year. It will very likely be next year. So that's one option. Another option for working with me is I do one-on-one like consults. So paid consults where if you want to sit down, just like kind of the conversation that we've had here, but talk about your specific situation, I'm more than happy to do that. And I share a lot of like the resources that I've put together, like travel flow sheets and hobby versus business and business day, like just documents that I've put together. And those are very helpful. So sometimes that is a good process where just sitting down one-on-one and going over that is helpful for people. I also put together a digital class, like a course online that goes over everything from hobby versus business all the way through travel deductions, home office, retirement options, all of those kind of things. And I did that because I can't help everybody. And the only way that I can do that is to create a class to help everybody. And I've priced it pretty low. After having other travel advisors go through it, I said, what is a price that you think is like a no-brainer to take it and go through it? So please go check that out. There's some free lessons that you can take so you can get an idea of like what the class is like. So that's another great option for people. And then I also have a Facebook group, Taxes for Travel Agents. It's a Facebook group. There's almost 6,000 people in it right now. And that's a great place to go and just listen to the questions that other people have or ask questions. And I try to answer every single one to the best of my abilities. And I provide a ton of free information in there. And that group it's crazy to me because when I started like this business, I just did it because I wanted to do it. I had no idea that there'd be such an interest and so many people involved in it. And it's exciting to see.
Yeah, it is. And I found you on the Facebook group, so I can attest that it's an awesome group. He gives a ton of value. And I'm definitely gonna have to check out your course because I definitely, I love me a good course.
Yeah. And I've tried to keep everything simple. So like if you go to my website is taxesfortravelagents.com, right? And from there, everything, you can find the Facebook group, you can find the class, you can find downloads, one-on-one calls, all of that stuff is right on that website.
Great. Okay, awesome. Well, thank you so much, Andrew. I really appreciated this, and I know this is going to be so helpful to everyone who listens in. So I hope everyone finds you, goes to your Facebook group, heads over to your website and definitely connects with you.
Perfect. Thank you so much for having me, and we'll have to do this again down the road.
Yeah, we'll do like a follow-up, like advanced tax.
Yeah. Okay, perfect.
Awesome. Thank you.
Okay.